So can I please have Mr. Mohan to explain us about the F3 framework?
What we call this is the F3 framework. So let me share my screen and take you through in about 13-14 slides what exactly is this F3 forecast framework. This actually research is the in-house capability of the Rupee Rakshak research team, and this is a methodology that what I am going to talk about is how we arrive. If someone asks Mr. Mohan, can you tell me where would be the markets in the next 3 years? So I can simply give, according to me, I think it will be 30,000 level. But what is the basis? A research house would never say, I think this will be like this. So it has to be with precise amount of data. There is a predictive engine. So that predictive engine is what I am showing you on the screen. This is what we call F3 forecast. We have named it as F3 forecast framework, and F3 means there are 3 F's in this, and this is called the Fibonacci forecast. So that is what is 3 F stand for. This is a market prediction engine. When we say market, we are actually predicting the market level, because so let us say Nifty is now 24,000 700 levels, and if the Nifty goes to 29,000 levels in 6 months, then the difference is actually the returns. So when we say market prediction engine, it is actually return prediction engine. Now I will take you through, there is little bit of technical things involved in this. In fact, what we see, Niti, is a lot of our clients are very knowledgeable about the stock market, though they do not share it with us. In fact, I have found lot of people to be highly involved in the selection, and though they invest with us, they have also been trying their hands with many other stock trading and lot of other things. So I do know that there are a large number of people who are actually market savvy. They may not be the research people, but they understand the concept behind the research. And for those who do not understand, you do not have to worry. Okay. It is okay. Whatever you understand, we can probably explain it later. What you can know is that with this, what we explain in next 13-14 slides, what is the methodology that we apply. Suppose if you have invested in about 30 lakhs or 50 lakhs, and we have given 10 lakhs into stock baskets, 30 lakhs into mutual funds, on what basis are we doing this allocation? And there has to be a science behind that, there has to be a procedure, methodology behind that. So this F3 forecast is going to be that method that we have found to be extremely useful, and I am going to explain this, and this is going to be the key. If someone says, what is the guarantee that I will get returns in future? You are telling me it will grow at 15%, or it will grow at 20%, or it will go at 30%. At what rate of return? Because different options are there. We know that we have close to 43 stock baskets. We have a basket in every sector, every theme, and every business group. So if you have to devise a way of creating a portfolio for various risk return things, someone wants 30% return also, we can create a portfolio, but they should be ready for minus 30% also. But on what basis are we going to do? That is the whole framework that I am going to talk about. So let us look at the screen. So I will be talking about what exactly is this Fibonacci future market prediction engine. Just to give a quick introduction in this slide about Rupee Rakshak, we are a SEBI registered advisory with multi-asset expertise, with proprietary frameworks built on real data, behavioral cycles, and institutional trading patterns. In fact, we also have another company called Tofi Platforms Private Limited, where we do algo platform for B2B, that is for institutional trading. Then there is, right now what I am talking about is the powerful market prediction engine. So I will move on with more information on this. What is the need for this kind of a predictive engine? So the forces that are in the market, basically one is the market volatility, the global headwinds, the asset inflation, the demand, the global headwinds are one. Then there is asset inflation, demand, data driven clarity. So the investors need an engine that aligns past performance with forward outlooks, and Rupee Rakshak offers just that through this F3 framework. It helps you to predict, plan and profit, whether you are investing 5 lakhs or 5 crores. So, it is that powerful is this F3 framework. What exactly is the F3 framework? So, F3 stands for Fibo, Funda and Forecast. So, it is F3 framework is Fibo, Funda, Forecast. So, what it does is Funda means basically fundamentals. So, there is a fundamental analysis we call, and in predicting what exactly will happen to the stocks or the share prices, there are two ways to look at. One is the fundamental analysis, other is the technical analysis. So, fundamental analysis basically looks at what is the profits of the company, what is the revenues of the company, and what is the expected orders, and all things about the balance sheet, the management, that is called fundamentals. So, we are actually in this, if we go back to the screen, so it combines, Funda is actually fundamentals. So, here it is basically EPS growth trends. When we say EPS, it is earning per share. So, whatever is the profits that company has made in a specific quarter. So, the number of shares that it's there, free float shares or total number of shares, if you divide by that, if there is 100 crores and there is 100 crore shares, and then it will be EPS will be 1 rupee per share. So, earning per share is the important parameter, and that it combines that. So, when we say Funda, it's basically we are talking about EPS, and then with Fibonacci-based Analytics. Now, I will talk about this more in the next slides. So, this is analytical technical analysis. So, one is we are combining fundamental analysis along with the technical analysis. So, if you see, the Fibonacci is basically predicting the when the markets will reverse the price levels. So, the price levels we talk about Fibonacci, that is why in F3 there is Fibo and there is Funda also. And why are we doing this is to generate reliable statistical forecasts. If you see in the slide, so it is to statistical forecasts of market levels and portfolio returns. So, realistic returns, if you have to do, you have to combine both fundamental, and especially when I say return prediction, it is not for 1 week or 1 day or 1 hour, this is for 1 year plus, 1 year, 3 years, 5 years. So, it is for long term. Still predicting long term returns would be based on the one fundamental factors, that is the earning per share. Then there is this technical analysis parameters, that is the Fibonacci levels, also called golden ratio. So, in this particular F3 framework, we are going to apply to all the 40 plus equity baskets as well as to 60 plus mutual fund baskets, including the mix of some debt basket. So, this moving on to the next slide, let us understand what exactly is this EPS and why this is important. Why fundamentals matter, the power of EPS. The EPS is earnings per share, as I explained before, is the core driver of a stock value. There is a saying in the popular saying in the stock market that the price of a share is the slave of earnings. The price is slave of the earnings. So, if the profits increase continuously for any particular company quarter on quarter, the share price has to go up. So, that is the most fundamental thing in any stock price review. What will happen to the price? The underlying company, whichever stock that you are going to invest, its profits has to go up. So, that means if profits goes up means profit per share or earnings per share. Here profit is called earnings. So, whatever is earning per share, so that is the core driver of the stock value. The consistently quarterly the EPS growth tend to deliver superior returns, and our system, that is what we have, the F3 the framework, it analyzes the past 8 to 12 quarters and predicts the future 8 to 12 quarters of the EPS data across the sectors. So, we will have this kind of return expectation. Suppose if it is a banking sector, we will have for banking sector what is the future EPS based on the last 10-12 quarters EPS. Moving on to the next slide. EPS as a predictive indicator is forward looking EPS forward looking stock price. So EPS actually, like I said, mimics the stock price. If EPS goes up, actually stock price has to grow up. This is the way most of the research houses predict the future. If you have seen such emails from your brokers that according to Motilal Oswal, they are re-rating this particular stock. The new targets are, let's say for HDFC Bank, from the current level of 1,500, they are expecting it to go to, for example, 2,000 or whatever. Yeah. Their prediction is basically based on this balance sheet and the future earning expectations. That is what we have incorporated. The second point, very important, is the market rewards the profit momentum with re-rating. That is what I just said. With Motilal Oswal or any of the research houses, they have a re-rating of the profits depending on the profits generated by that company quarter on quarter.
Okay.
So the third point is F3, our framework evaluates the EPS trajectory to estimate next 4 quarters or next 3 years of growth. If I want to estimate 1 year, then I will take 4 quarters. If I want to actually calculate for next 3 years where my specific sector basket will be, it will be depending on the 12 quarters or the next 3 years. What will be the EPS growth? Then the funda part, this is actually what we call the fundamentals. A simple single parameter, but the most powerful one. Now let's also understand from EPS to portfolio weightage. So it automatically assigns higher weight to high growth sectors depending on what kind of return customer is expecting. If customer is expecting high returns, automatically allocation is given to high growth sectors in his portfolio, and down weights stagnating or overvalued sectors or stocks that are there, for which automatically it reduces the amount of money invested in that particular stock basket, and also allows for return optimization without extra risk. So that is the core thing. So without actually adding the risk, it actually increases the optimizes, rather than increase, I can say optimizes the returns. So moving on to the next part is the Fibo. We talked about funda, now we will talk about the Fibonacci. Fibonacci, if you have actually looked at, in fact it is not Fibonacci sequence. A lot of people learn this in maths, in statistics. It is the nature's law of distribution, and it is found in galaxies, in pine cones, seashells, and it is also there in financial markets. Wherever you want to predict something, the future probabilities, you actually use this. There is 61% in Fibonacci levels, we say the golden ratio, and 61.8% retracement is often where buying or reversal happens. Suppose if a price has gone up from, let's say, from 100 rupees to 160 rupees or 170 rupees, it is likely to reverse from there. So if it goes beyond 61%, it is likely to again come down, again then go up. So to find that exact reversals, this Fibonacci levels are used, and we actually use 50% rule. We don't even wait till 61.8%. So we use this principle to define entry exit bands on indices and our baskets. Moving on further, Fibonacci in market forecasting. Where all normally people use this Fibonacci level? For spot market bottoms and tops, to predict retracement zones and breakout targets, and to understand the cycle behavior across, be it Nifty 50, mid caps, bank Nifty and more. So generally it is used by most of the analysts and most of the research houses, but we are making this as a standard parameter for us. So this is the Fibo part of the F3. So I explained about the fundamentals with the earnings per share, and now technical part is with the Fibonacci level. So what our system does? So the merging of both Fibo and funda is our forecast. So that is why it is. So what we do here is EPS based price discovery. So second is the Fibo based price movement, and whatever is the output, future market level, range in percentage plus specific basket return expectation. just to make it simple, what exactly this means, it will calculate what is the return based on the EPS. Let us say according to the EPS growth, I am expecting let's 20% return in a specific banking sector in the next 3 years. According to FIBO level, I am expecting 28% returns. So it will mix and match and arrive at an output what is the ideal way between these two, and the future market level is calculated for a specific sector first. Let us say we have a banking sector, we also have Rupee Rakshak banking basket. So if you want to invest in Rupee Rakshak banking basket, it is always tracking the Nifty bank. So the bank sector in the Nifty is what it tracks. So we will also do this for the Nifty bank, that is the referral index, and accordingly we will arrive at how much our basket can outperform in that period of. So that is what is the output that I am talking about. So if I move on to the next slide, how the system works. So first phase is it analyzes the quarterly EPS trends, then maps the Fibonacci levels for index and sector baskets, merges EPS and Fibo to project 1 year, 3 year returns, and based on this projected returns, and this can change every week, it is not like once we run it and keep it, this is run at the point of making the portfolio. Okay. Also it is run at any point of time whenever there are changes for changes of the portfolio. So it will, recommendation of the basket level allocation is based on this methodology, and also construct custom portfolio for your return goals. If someone is expecting 16% in next 3 years, it will only do the baskets that can be allocation, everything it will do automatically, so that the right basket is chosen and the right amount of allocation is also chosen. So that talks about, let me give an example on the screen. So here is the example. Let us say someone comes with a 50 lakh model portfolio and he chooses to achieve a target return of 12 to 13% only, and risk level is moderate, and F3 picks the basket with stable earnings and ideal Fibonacci support. So portfolio would include 4 to 6 equity baskets, 3 to 4 mutual fund baskets, and smart debt. Of course, we never invest entire 100% into any of the equity. It is going to be some amount of debt also. This will be monitored real time, and rebalance alerts will be based on any changes in the projections in the next 1 year or 3 years, so that it is aligned to the future expectations. And if the future expectations remains the same, then we do not have to make changes in the basket level, so that after 5 years you do not end up seeing that again I have chosen a wrong basket or it did not perform. So that is why this methodology, and 100 plus, just again sharing the screen there, you can see 100 plus baskets are tracked by framework, that is F3 framework, and 40 plus equity baskets that are across themes like auto, defense, PSU, IT firm, infra. All these baskets are there. We already have it on our rupeerakshak.com if you go to explore page, and then there is 60 plus mutual fund baskets, active, passive, small cap to even government bonds, gilt, and customized for risk tolerance, return expectation and the liquidity needs. Moving on to the next slide, why F3 is your best bet. So basically it is because it is based on time tested data and universal law, that is Fibonacci. It captures both business growth in terms of earnings per share and market behavior in terms of the Fibonacci levels. It reduces reliance on gut feeling or media noise. You cannot, which I covered in the beginning, that we never give any projection just like that. True. It should be based on the actual data, and it gives investors a calm, quantified roadmap to long term wealth. So that is the final thoughts. So predict, plan, prosper, no model can be perfect, but F3 is the smartest compass you can have. So designed for long term investors who want clarity with conviction. You can trust the engine, you can trust the math, and F3 by Rupee Rakshak, where capital works and you don't. When I say capital works, it is the brain, the research behind that actually works, and you can explore more of this. We will be sharing lot more information on this going forward, and that's a quick sum up on the F3 framework, the predictive engine of Rupee Rakshak, which is the sole proprietary in-house production, and that's going to be the key parameter, delivering returns for our clients in future, with the amount of certainty that this much will definitely happen. Again, there is a range in that. It says the range of anywhere between 13 to 17 or 18 to 23, but surely we would, what the back testing, all that what we have done, we are sure will be closer to the top end of the projections. So that's about the F3 framework.
Thank you so much, sir, for explaining this framework very beautifully.